Okay, welcome. My name is Kyle, and this is an e-tutorial on how to solve problem E14-13 from your workbook. So Zelda Solutions earned net income of $152,000 in 2020. The general ledger reveals the following figures. There's preferred shares and common shares. The preferred shares have a fixed dividend, and that dividend is $1.50. The board of directors has authorized them to issue 10,000 shares, but currently there's only 4,000 shares outstanding. That's preferred shares outstanding. The total preferred shares have an equity value of $50,000. And similarly, they have common shares. The board of directors has authorized an unlimited amount, but currently there's only 10,000 issued and outstanding. The dollar value of the 10 or 100,000, sorry, the dollar value of the 100,000, the book value of what's outstanding is $300,000. So the total equity section between these two amounts of shares outstanding, the share capital, is going to be $350,000. Now, there could be other things in the equity section of the balance sheet, retained earnings as an example. We don't need to know that right now. This isn't a retained earnings or completing the equity section of a balance sheet question. What we need to do is compute Zelda Solutions Inc. EPS, that stands for earnings per share for 2020, assuming that there's been no changes in share accounts during the year. So if this is new terminology to you, which it may, know that EPS is a very common and heavily focused financial metric. It stands for earnings per share. So EPS is earnings per share. What it is net income minus preferred dividends divided by the weighted average common shares outstanding. So my apologies on my writing there. Net income minus preferred dividends divided by the weighted average number of common shares outstanding. So I should have written that in. That's number, not the book value of common shares. So what it represents is the amount of net income per common share outstanding. Now, organizations can issue shares throughout the year. They can, if they wanted to raise more cash through an equity issue, they could issue and increase the number of shares outstanding. And in this case, it looks like common shares, they have an unlimited amount authorized, and there's only 100,000 shares issued. So if they wanted to, they could issue more shares. However, they could also buy back shares. So if they wanted to buy back their shares to reduce the number of shares outstanding, they could also do that. I emphasize that because the denominator here is the weighted average number of common shares outstanding throughout the year. So since the number of common shares can fluctuate throughout the year, the denominator is going to be the weighted average throughout that period. But in this question, we don't need to know that because it said, assume no changes in the share accounts during the year. So we're assuming that throughout the year, there were 100,000 shares issued and outstanding, and that number was fixed. However, I did want to emphasize that that number can fluctuate, and when it does fluctuate, we need to calculate the weighted average common shares outstanding. In this case, the weighted average, since it was fixed, is still going to be the $100,000. So in order to solve this, it's going to be relatively straightforward. Earnings per share, EPS, it equals net income. Well, net income was 152,000 minus the preferred dividends because, well, EPS is the amount of net income available per common shareholder outstanding. So we need to deduct the preferred dividends that are going to be paid to preferred shareholders. So in this example, we're given the preferred shares, and they have a fixed dividend rate, $1.50, and there's 10,000 that are authorized, but 4,000 that are actually issued. So what we're going to do is the $1.50, that's the dividend that's going to be paid to the preferred shareholders. We're going to multiply that by the 4,000 that are actually outstanding and issued. This gives us our numerator. The denominator here is going to be the number of common shares that are outstanding, and that's 100,000. So what I'm going to do, I'm just going to divide my numerator into my denominator. So 146,000 divided by 100,000 is going to give us an earnings per share. Remember, that's the net income per common share outstanding in this example is $1.46. Thank you for listening. I hope you found this helpful. My name is Kyle. Have a great day.